Hey friends, Raul Jimenez here with the Schrader Group. Super excited. Welcome to 2024. I'm with my good friend Jon Tober, and we're going to talk about what the market's going to look like, what interest rates are going to do, and go from there. So Jon, talk to me. I mean, we just came out of 2023. I mean, the first and second quarter was okay, and then we saw that the rates just kept on going up, and then third and fourth quarter, it got really stagnant in our market. Inventory started to rise. Buyers just weren't coming to the plate because they were nervous, and I would too at an 8% interest rate. But we saw a little bit of relief coming out of the new year, or out of the old year, I should say, and now we're in 2024. A lot of hype about what's going to happen with the Fed, a lot of hype about the market, things like that. I want your expertise. Tell me a little bit about what you think is going to happen.
Okay. So the number one thing that hits my mind when I think about dropping interest rates and where that's headed is the market going to crash, right? And because what happens with the lower interest rates is the Fed has a requirement of keeping the economy going, right? And the only thing that changes that is a weakening economy. And so the question on that is if the market's going to crash, right? And what I think about the past is a good indicator of what our future looks like. So you and I have been doing this for a long time.
Long time.
Right? Old dogs, maybe.
Easy.
But the thing about
season.
Oh, that's
season,
the word.
Yeah,
season. There we go. I like that one. That's much better. So the thing about what we do is history repeats itself, and we get to see patterns. They're not exactly the same, right? But let's take it back to COVID. When COVID happened, interest rates went to like 2-3%. It was a wild time. So when you had a buyer and you're ready to make an offer, what kind of offers were those?
Well, it was tough. There was super low inventories. I mean, it was definitely a seller's market. The seller could ask for everything, name the firstborn kid, whatever it was. Yeah. I mean, they had the go ahead to do that. And, our buyers, they were getting beat up left and right. Houses were going through the roof, over asking price, and then the house they were going to buy or sell was, the same situation. So they had a lot of things. They had to give away a lot of concessions that they normally would have been able to negotiate.
It was a tough time for buyers, right?
It was.
Yeah, and not only that, but it was an uncertainty of, can it sustain itself? Like, will these values continue to hold itself? And when you think about mortgage rates dropping, we should see that pattern. It's not going to be identical, right? Because it's definitely not COVID. Rates aren't going to 2, 3. We'll most likely never see that again.
No, that was free money. I mean,
yeah, it was nuts. Yeah, but what we'll probably see is a multiple offer situation. Values continuing to do well. During that COVID phase, like 19 through 2022, we had some really substantial increases in values. We had some really good appreciation rates. We did. 2023 rates went up just like you touched on earlier, 8% in September, October, and we saw a decline in median sales price, like 7% year over year during that time frame, right? Which we needed that to happen because we needed to sustain itself and get back on track where we are. But fast forward to this year, 2023, rates drop, and we should be able to see multiple offers, values continue to go up. So I think that, is the market going to crash? Absolutely not. What's your thoughts on that?
Yeah, no, I mean, we're in San Antonio. I think we're very fortunate and blessed to be here. I mean, we're in a market that's 60,000 dwelling units behind where we need to be. We still get 96 people a day to our metro. So I think we're fine. And we got great economies of scale here. 23 was a rough one for a lot of people, but coming into 24, I think the buyers have had the upper hand because they needed the upper hand after the last couple of years. But now we're starting to see that, sellers got to come to the table and say, let's make this a workable deal. So I think we'll see a lot of sellers come back out, but I mean the buyers, they were scared for a little while. They had options because if you could buy at a higher interest rate, great. Then you could pick whatever you wanted. The builders, things like that were in play. But I think now we're going to see pre-existing market come back in, and I think the buyers are going to come back to the table. I think there's tons of pent-up demand. They've just been sitting on the sidelines waiting. I mean, from the last 20 days or so, we had about 12,000 inventory homes. Now we're at about 1,182. So we've seen a big decline already in just 20 days. So is it the new year, new me? Not too sure. But I could definitely say that, first and second quarter are looking promising, especially the Fed continues to do what they do. Yeah,
totally agree. And like real estate, it's the longer you own, the more wealth you collect. Regardless of what happens over time, values do well.
So let me ask you this. We touched a little bit about what's happening in 23. What's going to happen here in 24. Buyers, we're still in that position where if it's 6.5, 7.5 par, whatever it is for their credits and everything like that, I mean, what options do they have? Because at the end of the day, I mean, people here in town, we buy payments, we don't buy mortgages, right? So we can afford that payment, then we could go ahead and make that purchase. But What other options other than the traditional route have you started? Because I'm sure you started crafting in 23, like, to be that cutting edge, and get the next greatest and best thing.
Right. The biggest story last year when values started to increase and rates started to go up was two problems. How do I afford this payment, and how do I come up with this money I need to buy?
Sure.
Those are the two challenges. And for a moment in time, it was a challenge for the mortgage industry. It was so tough to have these conversations. But I'm going to share a story with you.
Sure.
A buyer we just closed in December.
Okay.
And these are the stories that just I love. It makes my job.
Well, that's why we do what we do, right? I mean, when it touches the soul.
Ah, man. So, single mom, 4 kids, 4 boys, and she closed in December. And the thing about her situation is she wanted to keep the payment about $2,500 a month.
Okay.
Found a home she loved. It was $300,000. She only had about $5,000 saved.
Okay.
Her realtor referred her to me, and the reason why she did is after talking with other mortgage companies, what she was told is she needed $15,000 for down payment. Payment was going to be about $3,000 for that $300,000 house. What we did for her, what worked out, the reason why she closed, and it fit right in the lane of what her goals were, was we had a 1% down payment program.
Okay.
Right? So she bought the house with 3% out of pocket. Seller paid for the closing costs, everything else. No monthly mortgage insurance.
Wow.
So that payment was right at it was like $2,550.
And just to be clear, when you did that math earlier, you were doing a traditional conventional loan, 5% down kind of deal, and then you were able to transfer it over to this program?
That's right.
Okay.
1% down payment, no monthly mortgage insurance.
Wow.
Okay, so we just touched on last year's value,
Sure.
right? So 2023 was a tough year. Values were 7%, median sales price 7% below, right? So being being as successful as you guys are, what are y'all doing to help move your current listings on today's market, being as challenging as it is?
Sure. So we've done a lot of things, and I think it's navigated from mid 22 to where we're kind of at right now, because I think March 23 is kind of when we saw things just slow down, right? Yeah. It was almost as if COVID happened all over again for the resale side, because nothing was moving, tons of inventory was rising. I mean, at one point we were just shy of 13,000 inventory homes.
Yeah.
Area wide, which is a lot.
That's a lot.
So what we did, and I mean, we've been in business for 42 plus years, and we went back to the drawing board and just said, what do we need to do to separate ourselves from everybody else? We've been super blessed to have an award-winning marketing department, tons of awards there, an amazing photographer, and what we also instituted was every one of our listings gets kind of a white glove treatment, if you will. We have a stager that goes out to your property, because we found that 82% of the time, not only do we sell for more money, but we sell faster than our competition. So it's a no-brainer for us, right? We get our photography in there. We could do MAD reports. We could do all kinds of different things, drone footage if it allows for it. But we do different things that others won't, because we have a bigger team, and we have everyone on our staff to where we're not exporting it out to somebody else in another city, town, or anything like that. So we've done a lot of those features. Now, my job as a listing specialist is to go in the house and evaluate it. And when I say evaluate it, we realize that when the market was on fire in 22, you didn't have to do anything. You just put a sign in the front yard and you're getting offers. Now we got to go back to the basics and say, we need to paint the walls. We need to change out the carpet. 3 different floor tiles doesn't make sense, right? So we got to get that best impression first. So we're putting in money into our clients to show that we're with them, to say, hey, if it's going to cost $5,000, but we're going to maximize your money, let's do it. Let's make this happen. And we've been able to move our product and our inventories a lot faster because of that. And honestly, we're just working really, really closely with our selling community, because they have a goal, we have a goal, and at the end of the day, we're all in it together. Well, there you have it. Welcome to 2024. We're super excited. Jon Tober, Summit Funding. We're here for you guys. I wish you all the best of luck, prosperity, and wealth. We'll talk to you soon. Have a blessed day.